Namaskaram guys, this is Nishanth Reghunath here, welcoming you to a new video from my study Cracking Income Tax. And with this video, we are starting off with a very short, sweet and interesting chapter, and that is agricultural income. See, from the previous video, we saw that an income can be divided into two. As in, there are two ways in which an income can be divided as per the laws of income tax in India. And the two kinds are taxable income and exempted income. We have the whole study for taxable income following up after this particular study of agricultural income and other exempted incomes. But then just so that you know, taxable income, simple, is the income for which you have to pay tax. Exempted income, simple, is the right opposite, the income for which you do not have to pay tax. Alright. And out of the exempted incomes, the most important one for us to study is agricultural income. See, our government has always had a soft corner towards the agricultural industry because our country is an agrarian country. Our economy is an agrarian economy. The complete foundation for our country was laid by the farmers of our nation. Hence, the government wanted to promote agricultural industry as much as possible, and they did a promotion by way of income tax, and that's wherein they gave a major benefit to people who are engaged in agricultural income, wherein they declared income from agriculture or agricultural activity is exempt. Alright. Now, what we'll be learning from this chapter is what is agricultural income and how does this whole thing function? How does the whole exemption function? Is it the same for everyone? Is it the same for every kind of agricultural activity? For example, I can cultivate rice, I can cultivate wheat. At the same time, I can cultivate cash crops also, right? I can cultivate things like pepper. Yeah, I can cultivate tea. It's not on the same strata, right? A farmer who cultivates tea and a farmer who cultivates wheat, they're not the same. So does it work the same for everyone? Let's see. That's what we are going to see from this chapter. Okay. So without further ado, let's start. The first part of the study will be coming across section 10.1. That is the section which tells us about what is agricultural income and how is it exempt from tax. Okay. So section 10, please do keep in mind, section 10 of Income Tax Act contains all, I repeat, all the exempted incomes. Section 10 is a section wherein every single exempted income is detailed. Alright. Now, afterwards, we go to the study of understanding what is agricultural income. Then from there, we go to study wherein certain special assessees, certain special people who have a particular kind of agricultural income, which is a mix of business income as well, how to calculate their total income. I'll give you a simple example. Say tea industry. So the company cultivates their tea. Okay, they have their estates, tea estates, that's how we call them. In the tea estates, like in hill areas and high altitude areas and all. Hill areas actually. In Kerala, there are a lot of places, for example, Munnar. So they have these estates wherein they cultivate their tea. They farm their tea, they grow their tea, take the leaves, take it to the factory, convert it into tea powder, pack them and sell. So eventually they sell it as packaged tea powder. So say they are making an X amount of money as income and they are being taxed. But all of a sudden, they come to realization that, see, growing of tea, which is considered as an agricultural activity, is protected or is taken care by the government as an activity that is exempt from tax. So shouldn't we also get some benefit because we are also engaged in that activity wherein we are growing? So our whole business wherein we sell tea powder, one of the elements is growing, farming from our estates, right? So that's what we are learning there. How do they get benefit? And finally, we'll go to another topic, and that's called aggregation of agricultural income. Please don't get confused with the terms aggregation and agriculture. No, don't get it confused. Aggregation means bringing everything together. All right. So certain people, you actually need to bring agricultural income into your total income and find your tax payable in a pretty unique way. You will get benefit for agricultural income, but it's not so straightforward. That's what we'll be learning there. All right. So let's head to section 10.1 first. Yeah, let's head to section 10.1 first. I have my word file. Yeah, here it is. Section 10.1 states that agricultural income derived in India. Let me just get my pen active as well. Section 10.1 states that agricultural income derived in India is exempt from income tax. Alright. So the constitution has given complete powers for taxing of agricultural income to the state government, to the state legislature. See, income tax, it's not state legislature, it's central legislature. So the constitution did one thing. We'll take off the complete power of a central legislature as far as agricultural income is concerned. And in case if a state government wants to do anything regarding agricultural income, we'll give them the power. Alright. Now, what is this particular agricultural income that we are talking about? Is it just farmers going and growing crops? Or is it also the person who owns the land and conducts the farming by hiring other people? Say he can bring in agriculturalist. Yeah. So what is this agricultural income? Let's check. So as per section 2(1)(a), do keep in mind, section 2 is where all the definitions are. Just like how I said, section 10 is where complete set of exempted incomes are. Section 2 is where all the definitions of income tax are. Alright. Agricultural income means, number 1, any rents or revenue derived from a land in India, very important, and is used for agricultural purposes. So first definition of agricultural income is any rent or revenue that you get from an agricultural land in India. So say I have a big property, but say I am staying somewhere else. So I can't actively say I'm in location A. Let me just go to my note. Okay. Say I am in location A, but I have an agricultural property here. I have an agricultural land here, A in short, but I am staying here. This is where I reside. So I can't actively conduct farming here. So what I do is I rent this property out. I rent this property out to someone else. Alright, I rent this property out to say Mr. Amal. I rent this property out to Mr. Amal. Now Mr. Amal conducts farming, agriculture. Mr. Amal conducts agriculture, he harvests and sells his harvest. Now out of the income that he gets, so he gets income from agriculture, right? Out of the income that he gets, he pays me rent. Alright, he pays me rent. Now, as far as the law is concerned, this particular rent is also agricultural income. Understood? This particular rent is also considered as agricultural income. See, if this had been any other kind of land, say this was an industrial land, IL in short, and I rent it out. And I rent it out to another person, say his name is Sachin. He conducts, say, a factory there. And he's making good money. He's making good income. This particular income, if it was paid to me, I will have to pay tax because it's not considered agricultural income. Okay, it is considered normal income and it will be taxed depending upon what I'm renting it out. If I'm renting it out as land, it will be taxed under income from other sources. If I'm renting it as a factory, then other laws will come in. We'll have to check what it is. It can be either income from house property or income from other sources. Alright. Yeah. Or at times it can be profit from business as well. The third head. Okay. Now leave all that. Just keep this in mind. Any rent from an agricultural land received by the landowner is agricultural income. So any revenue from land which is used for agricultural purposes. Clear? Simple, right? Sorry, wrong file. Number 2. Any income derived from such land by agricultural operations and processing. Any income derived from such land by agricultural operations and processing. So what it says here is, so you have a land, you have an agricultural land. Say let's take the same example, I'm renting it to Mr. Amal and Amal is coming and conducting his operations, he's conducting his agricultural activity and he's making income out of that activity. For Amal, that income is agricultural income. But a very, very important factor here is, I'll highlight it using a very interesting color, unique color. What does the Income Tax Act or the authorities mean by the term agricultural operations or processing? What is this? What can be classified as agricultural operations or processing? We'll be learning that in detail further. Next, income from sale of produce. So whatever that I'm harvesting and I'm selling, yeah, that's agricultural income. No problem. Next, income attributable to an agricultural house property, that is farmhouse, subject to certain conditions. Say I have a farmhouse. If I'm getting any kind of income from that farmhouse that is associated with my agricultural land, that is also exempt, but there are certain conditions. That also we'll be seeing in detail. Alright? So first let's check this particular unique item. What do you mean? What does the Income Tax Act mean by agricultural operations? Let's check here. So agricultural operations are agricultural operations, the whole particular term of agricultural operations is divided into two: basic and subsequent operations. Now, what do you mean by basic operation? What do you mean by subsequent operation? That's what we're going to see next. And based on our understanding of the two terms, we'll come to this particular matrix wherein we'll classify one operation as taxable and the other as non-taxable. That's wrongly put. Once we understand the terms, we'll come to this matrix wherein we'll see how to classify which activity as taxable and not taxable. Alright. Yes, so what is basic operation? Basic operation means, very important, application of human skill and labor upon land, very important, prior to germination. That is before anything that you do before the planted seeds start to germinate. Alright, so things like tilling, sowing of seeds, planting, irrigations, cleaning up the place, leveling the place, adding manure to the soil, like setting up the soil, structuring the soil, things of that sort. Like whatever that you do until the plant starts growing. Alright? Now, subsequent operations is everything that you do once the plant starts growing. Alright? So subsequent operations mean operations which foster the growth and preserves the produce. So letting it grow. Rendering the product fit for sale in market. Okay, this is not FIR, this is supposed to be FIT. Fit for sale in market. And finally, which are performed after the produce sprouts from the land. So I planted, everything up to planting is basic operations. Now the plant starts growing. I'll take up a lot of new activities. I'll do things like weeding. Weeding is like taking off unnecessary growths. Pruning is like cutting, shaping and everything. Tending, harvesting, digging soil around it so that you can collect water. Things of that sorts. Yeah. Removing undesirable growths. Like things that you do to make sure your plant grows properly. Okay. So that's what you mean by subsequent operations. Now, if I'm a farmer and I'm doing both basic and subsequent operations, how will be my income treated? Or if I'm an agriculturalist, I'm only doing basic, how will be my income treated? If I'm an agriculturalist who's only doing subsequent, how will be my income treated? Always keep in mind, whenever an SSE is engaged in basic operations, his income will always be exempt. So I, as an agriculturalist, is doing basic, my income is exempt. I'm doing basic plus subsequent, my income is exempt. I'm only doing subsequent, my income is taxable. Alright. So wherever there is basic operation, the income is considered as agricultural. So basic or basic alone with subsequent, your income is agricultural and it is exempt. Now if it is only subsequent, that is no basic, then it is non-agricultural and it is taxable. Clear? Simple. Yeah, pretty basic. Yes. Yes. So coming back to our definition. So we finished this. Income from sale of produce. I don't think there is much to say. Whatever that you produce, whatever that you harvest, you sell. That's it. Now farmhouse. Now that's a pretty interesting area. Let's go to farmhouse now. Farmhouse. What is a farmhouse? So agricultural property, farmhouse, will be treated as a part of agricultural income, as in any income from a farmhouse will be treated as agricultural income provided the following conditions are satisfied. Let's check the conditions. Number 1, the building should be in the immediate vicinity of the agro land, or it should be on the land itself. So say, let me quickly take you to my note. Say this plot right here, this rectangular plot, okay, quadrant plot is my agricultural property. So I have a small farmhouse here. Condition satisfied because the farmhouse is within the agricultural land. Or say I do not have it here. My property, say there is a road passing by. Let's say the road passing by, my agricultural farmhouse is here. I have another plot here. No problem because it's in the immediate vicinity. By vicinity what it means is nearby area, in the proximity. Alright, in the safe surrounding distance. We do not have a proper definition as to how much that distance can be, but just keep in mind vicinity, like say it's in a visible area. Alright, yeah. Point number 2. It is to be occupied by the cultivator or receiver of rent or revenue. Okay, so coming back. Say I am the owner. I'm the owner of this land and I've given it to Mr. Amal. So I'm giving it to Mr. Amal. Either Mr. Amal should occupy it, or myself should occupy it. If some other party occupies it, that means this particular property is not associated to this land, right? Not associated to this agro land. Because if it had been, Mr. Amal would have occupied. If not, it can be me because I'm the owner. But if I've given it to someone else, gone. Alright? Next, it should be used as a dwelling house or storehouse or as outhouse. So, Mr. Amal or myself can use this particular property as a dwelling house, as in for the farmers to stay or for the agriculturalists or anybody who's associated with the activity wants to stay there, no problem. Or it can be used as a storehouse, like whatever the produce. Say I have produce from here, like I'm growing some crops. Pardon my poor drawing skills. Like I harvest these crops and I put them inside here. Once I uproot them, once I take them off the land, I store them here. Or I can use it as an outhouse because I'll have a lot of tools. Yeah, agriculture activity is a very laborious activity and it'll have a lot of tools. Storing all those tools, equipments, machines and everything. No problem. I can use it for all those purposes. But say I'm staying there and Amal is not staying and for now I'm saying like I'm occupying it. But what I'm doing is this is a very nice area, very beautiful area, and I decide to rent it out to tourists, people who come for tour. Now who's occupying it? Me? No. Amal? No. Tourists. So if I receive any kind of income from the tourist as rent, do you think it would be fair to treat it as agricultural income? No, right? That's it. And finally, the land is either situated in a rural area or an urban area which has been assessed to land revenue. So this particular area should be a rural area or it can be an urban area, but this urban area should be assessed to land revenue. Now what is a rural area and what is an urban area? That's what we're going to study next. Very, very important as far as income tax is concerned. Now this particular definition is going to be very important for you, not just for this study. It is important for agricultural income. Oh, sorry, wrong pen. It is important for, let's change this blue to black. It's important for agricultural income study and for capital gains. For these two chapters, this particular definition is very, very important. Let's quickly check what an urban area or rural area is. Stay with me. Any municipality or cantonment board with a population of 10,000 or more shall be treated as an urban area. And as per the following table, area up to a certain aerial distance shall also be treated as an urban area. Okay, I'll illustrate it for you. Let me just scroll this down a bit more. Why isn't it going down? Okay, better. Say, I'm drawing a municipality. So let this be a municipality. Okay. If the population here is greater than or equal to 10k, then this is an urban area. But if the population, I'm drawing another municipality, and the population here is less than 10k, then this is an agricultural area. Sorry, rural area, not agricultural area, rural area. Sorry. Why isn't the pen working? Yeah. Rural area. Alright. So what about the area surrounding this area, like outside the municipality? How should that be treated? Okay, let's see. Say if the population is more than 10,000 but not exceeding 1 lakh. So the population here is more than 10,000 but not exceeding 1 lakh. So I'll draw one more circle. Let's draw one more circle. Go down. Wait. Some sort of glitch. Perfect. Let's draw one more circle. So my population is more than 10k, but less than or equal to 1 lakh. Then this area for sure will be urban area, right? And up to a distance of 2 kilometers. Up to a distance of 2 kilometer aerial distance. Okay, this is aerial distance. That is distance measured from air. So like the road can go like this and go like this and go like this, and 2 kilometers might be here. That's not what we are checking. We are checking aerial distance. Go to the air and straight distance. Clear? So this we do not want. We need aerial distance. Up to distance of 2 kilometers also will be treated as urban area. Okay? So your population is say like 75,000. So that particular municipality is urban area and 2 kilometer radius is also urban area. Because it's assumed that if there is 75,000 people in the municipality, then within like 2 kilometers also there will be quite enough people and it will be developed. Unlike a rural area. Alright. Now, see the population is more than, I'm just rubbing this off. Population is more than 1 lakh. Population is more than 1 lakh. Wait, it's 1 lakh, but not exceeding 10 lakhs. But not exceeding 10 lakhs. But not exceeding 10 lakhs. Say more than 1 lakh. More than 1 lakh population, but less than or equal to 10 lakhs. Then this is definitely an urban area. This municipality is definitely an urban area. But also up to a distance of 6 kilometers instead of 6 kilometers. Say the area is 5 lakh population. So the assumption is that the idea is that area is definitely an urban area, and the assumption is a 6 kilometer radius will also have people staying. Like it will be developed. It will not be rustic like a rural area. Alright, clear. That's it. Now change everything. If the population is more than 10 lakhs, then up to a distance of 8 kilometers. Up to a distance of 8 kilometers. So I'm just rubbing this off. And this. So if my population is greater than 10 lakh, then this is an urban area for sure. And also up to a distance of 8 kilometers will be an urban area. Clear? Simple. Yeah? That's it. That's all. So would it make sense? Just hear me out. Would it make sense if I say this is urban area, this is also urban area? So any area beyond 8 kilometers is a rural area. Yeah? Prima facie, that's correct. Yes? This is correct. Yes? But there's a small issue here. What if there is another municipality here? Another municipality here. And the population is like, say, 5 lakhs. Sorry, 15 lakhs. So what happens? So from here, a distance of 8 kilometers also becomes urban area, correct? So this is an urban area and an 8 kilometer distance also urban area. So this particular area that I wanted to assess has become urban, correct? Yeah? So what you need to do is, instead of going to the municipality and checking it's an urban area or not, urban area or not and checking the distance, what you need to do is take your area. So take the area that you are measuring. Also, please do keep in mind you won't have such questions for examination. As in to find out whether it's an urban area, it's like so complicated. It will be basic stuff for the examination. Just one place they will give and say, this one place has so much of population. So, and there's another place which is like aerially at a distance of 30 kilometers or say 12 kilometers. Do you think the other places, I'll give an example. It might confuse you. So there is area A, which has a population of 20 lakhs. And then there is area B, which is at a distance of 12 kilometers. And then there is an area C, which is at a distance of like 6 kilometers. Then there is an area D, which is a distance of 9 kilometers. Which of this, 9 kilometer aerial distance. Okay, all these places are at 12 kilometer aerial distance, at 6 kilometer aerial distance and 9 kilometer aerial distance. Which of these following areas are rural or agricultural? That's what they will ask at most. So, urban, sorry, not agricultural, urban and rural. This is urban. This is rural. This is also rural. Yeah. Because anything beyond 8 kilometers, yeah, that's treated as rural. But please do keep in mind, because of the example that I showed here, you cannot exactly say this is area A. Okay. What if there is another area Z here? So it gets more difficult. Yeah. So what you need to do is, whenever you get such a question or such a case, you won't get a question for intermediate that complicated. What you need to do is check the area. From this area, check all the other municipalities nearby. So there is municipality 1. There is municipality 2. There is municipality 3. There is municipality 4. Say municipality 2 has a population of say 12,000. That means up to an area of, say, I'm just drawing for municipality 2, up to an area of 2 kilometers from municipality will be urban. Correct? Yes. Say municipality 1 has a population of say 2 lakhs, then up to an area of 6 kilometer radius, will be treated as urban. Say municipality 3 has a population of say 8,000, then 2 kilometer radius, urban. Municipality 4 say has like 12 lakhs population, then to a distance of 8 kilometer, urban. So when you check now, thankfully our area does not fall anywhere. We took all the nearby municipalities, drew the radius, so the colored areas are urban area, so the leftover areas rural area. So this is definitely a rural area. See, this is how you do. Okay, so since you know this, I'm glad that I've taught you this, because in case our institute decides to put a complicated question, please do keep in mind this is what you have to do. Alright, perfect. So yes, that's how you treat or how you classify an area as urban or rural. Alright, now we are done with the first part. Let's go to our chart. So we saw what agricultural income is, and from agricultural income we saw multiple stuff. Then they were, any revenue from land used for agriculture purpose. Any revenue from land used for agriculture purpose is agricultural income. Any income from agriculture operations is treated as agricultural income, but make sure you classify them as basic and subsequent. So if it's basic alone that you're doing, it's agricultural income exempt. Basic plus subsequent you're doing, agricultural income exempt. But only subsequent you're doing, non-agricultural income taxable. Sale of agro produce is agricultural income, no problem. Farmhouse shall be treated as, any income from farmhouse shall be treated as agricultural income, provided the farmhouse satisfies 4 conditions. And the conditions are: number 1, farmhouse in the agro land or in the immediate vicinity. Number 2, it is occupied by either the cultivator or the receiver of rent. So Mr. Amal can occupy or myself can occupy. It can be used as a dwelling house, that is for staying purpose, residential purpose. It can be used as storehouse for storing our agricultural produce, or as outhouse to store our tools, equipments, machinery and all. And finally, it should be in a rural area. If not in a rural area, it should be in an urban area which is assessed to land revenue. Alright, clear? So rural area, urban area, how to classify, we saw, right? So I think we are done with the first part. Yeah, we are done with the first part of understanding what is agricultural income. Now we are going to the interesting area wherein we are going to compute incomes which are partly agricultural and partly non-agricultural. Okay, so how to calculate their taxable income is what we are going to learn right now. So let's start off with the second part of our study. So let's head to our Word file. Says incomes which are partly agricultural and partly non-agricultural. See, in this area, in this particular area, what you need to understand is there are 2 kinds of treatment. One treatment for certain specific assessees from the industry of tea, coffee and rubber, and another treatment for all other assessees. So we have 2 treatments here. One is a rule-based treatment, and that is for the assessees that I mentioned previously, tea, coffee and rubber industry assessees. And then we have a general system for all the other assessees. Alright, so let's first check what this particular rule-based treatment is. Okay, so when an assessee is engaged in an activity which is integration of both agricultural and non-agricultural operations, this particular section is applicable. Alright, so for example, the same one that I gave you previously, wherein a person cultivates tea from their tea estates, grows the tea, takes the tea leaves, dries them up, converts them into powdered tea and packages them and sell. So the whole activity has an agricultural portion and a non-agricultural portion. So what is the agricultural portion? He's carrying out all the basic and subsequent operations, correct? He's carrying out all the basic and subsequent operations for growing the tea. Then post growth, he is taking care of all the subsequent activities to make it fit for the market. Now it's not just that he does, he takes all the tea that he grows to the factory, does an industrial process of converting the said tea to tea powder or consumable tea granules, packages them and sends it off, which is retailed to us in supermarkets and grocery stores. So that particular side of his business is certainly not agricultural. Yes, it has nothing to do with agriculture. So say this person declares an income of say 20 crores for one particular year. The income tax asks him to pay tax for the complete 20 crore. Now he's like, sir, please, I did some agricultural activity. You need to give me some sort of allowance for that particular agricultural activity that I did. So out of the 20 crore, please give me a certain benefit so that I can take some portion of my income out from the taxability criteria. So income tax was like, fine, we'll give you. But we'll give you based on certain rules that we have written. And the rules are Rules 7A, 7B1, 7B1A and 8. So we are talking about T. T falls under Rule 8. So whatever income is declared, out of the income, 60% can be taken out as agricultural income. Don't pay tax. So out of 20 crores, 12 crores, take it off. Don't pay tax. And 40% is, that is 8 crores, you pay tax. But then please do keep in mind, this particular section has a relation with section 33AB that you will be learning under the head profits and gains from business or profession. So profits and gains of business or profession, that's the third head of income, which falls under section 28 of chargeability. Under that head, there's a particular section called section 33AB, wherein you'll be learning a bit more about SSEs who are engaged in the business of tea, coffee and rubber. Alright, so always link these two sections when you learn. Alright, agricultural income and section 33AB. Now, if this particular person had been into the business of rubber, then his proportion would be as follows. 65% agricultural income, 35 business income. Just pay tax for 35. Now, if the person was into coffee, now coffee you can get it two ways in the open market. Generally, you can get it in two ways. One is like just grown and cured coffee beans. And the other is grown, cured, roasted, grounded, and in case if it's required chicory added or not, you get a coffee powder as well. So for sure, it can be concluded that when coffee is sold as grown and cured in one hand, and it's sold as grown, cured, roasted, and grounded in another hand, for sure it's here where more of industrial activity is done. Here is just growing and curing. What is curing? Curing simply means like drying, like letting the climatic conditions, letting the environment do its own effect to your product. So there is no machine or anything always required for curing. So curing is like drying or dehumidifying, or at times it can be like not the opposite of drying, like making something moist, like making something absorb moisture. So that's just curing. But when it comes to when it comes to the next set of activities, that is roasting, grounding, powdering, adding chicory, now that's all completely industrial. Correct? So it's this one which has more of industrial activity. So here the share of industrial income should be more. Correct? Yes? But here the share of industrial income should be less. So keep that in mind and come. So in coffee is grown and cured, then majority of the income, 3/4 of the income, 75% of the income for my right hand is agriculture. Don't pay tax. Whereas if it's grown, cured, roasted, grounded, powdered and added chicory, whatnot, then this agriculture portion will come down. Non-agriculture will go up. 75 comes down to 60, 25 went up to 40. So 7B1A and Rule 8, these two are similar. So tea powder, coffee powder. Please keep in mind, powder, 60-40, 60-40. Coffee grown and cured, coffee beans which are grown and cured, 75-25. Rubber, 65-35. Clear? So you take the total income, split it likewise. Alright, so you will get say 2 marks, 4 mark questions wherein you will be questioned about your understanding about this particular area. Yes? So that's all for the special treatment. Now we are going to the general treatment. Say for an SSE who's not into tea, not into coffee, not into rubber, but their activity involves agricultural operations at the same time business activity as well. I'll give you an example. Say Lay's. Imagine Lay's cultivates their own potatoes. They have acres of land and they grow their potatoes, harvest their potatoes and take their own potatoes and make Lay's. And they sell Lay's. Now their business income will be by way of selling Lay's, correct? Now say they have a total income of 20 crores. Now they are going to pay tax. And the government asks them, the income tax hasn't paid tax of full 20 crores. So Lay's is like, sir, we did an agricultural activity just like the tea sellers, just like coffee, just like rubber. You gave them benefit, but not for me. It's not fair. So income tax said, okay, we will make an arrangement for you, but then we cannot insert any rule per se, but we'll give you a generic treatment which you can take. So there came another company making coconut oil. They also said, sir, we are cultivating our coconut trees, taking our coconuts and converting into oil, and we are selling that oil. So out of our income, there is an agricultural portion as well. So give us some benefit. So the government was like, okay, take the same benefit as lace. Then came another party. He's selling sugar. So that party said, sir, we are not just simply selling sugar. We are cultivating our sugar canes. No, we are doing farming. We are cultivating sugar canes, converting that sugar cane into jaggery and then finally converting into sugar and selling. So shouldn't we also need some benefits, sir? So income tax was like, okay, you also take. Then income tax released a statement like, anybody who's other than tea, coffee or rubber, whose business activity involves both agricultural and non-agricultural activity, you can take the benefit for your agricultural activity as per what I'm going to say next. Okay, so I've just summarized the whole treatment into a very, very small flowchart. If you understand this flowchart properly, sorted. Your answer is then and there. Done. Finished. Okay. So this is how it goes. Let's take the example of lace. Okay, let's take the example of lace. So lace cultivates, say, 1000 kg of potatoes. So out of 1000 kg, they take 800 kg to manufacture the lace product, their product. 200 kg they don't need for lace because it's over than their capacity requirement. So they decide to sell it off. So they're selling off their agricultural property. Sorry, not agricultural property, agricultural produce. So sale of agricultural produce, section 10(1), agricultural income, correct? So it's fully agricultural income. So what are their sale values and whatever cost they incur for cultivation. COC stands for cost of cultivation, just reduce it. You'll get it like per kg cost of cultivation was like 1 rupee. So for 200 kg, 200 rupees. Whatever it is, just reduce it and find your agricultural income. Now at the same time, 800 kg was used to make lace. Now what to do here? Number one, find a notional agricultural income. By notional agricultural income, what it means is, if this 800 kg had been sold out there in the open market, what would have lace or the company received? That is this. Fair market value for 800 kg. Take that. Reduce cost of cultivation for that 800 kg. Your notional agricultural income. Let's just put this NAI, notional agricultural income. Because you're not actually receiving it. This is a notional calculation. Okay. Now your next step is, you are selling lace and you are making money. Whatever money that you are making from lace, consider it as business income. Consider it completely as business income. So take the complete sales value here. Say let it be like 20, let it be 20 lakhs. Alright. Number one, reduce the fair market value of this particular asset that you are selling. Alright. Sorry, not asset, good that you are selling. That is potato, the notional income of selling potatoes. See, I recorded my fair market value of the 800 kg here, right? On the same base of sale value received here. So say I'm selling 200 kg of potatoes, say at 10 per kg. So it's 2000 here, correct? So for 800 kg, 800 and 8000 here. So from the 20 lakh, you first reduce the 8000. You would have definitely incurred cost for converting the 8000 kg potato into potato chips, correct? So whatever cost you incurred for making lace, that is from your agriculture product, that are the potatoes that you brought in, 8000 kg potatoes. Whatever cost that you're incurring for converting those potatoes into lace, that's referred to as further processing cost here. Reduce it next. Say for 1 kg of potatoes, say they're incurring, say cost of something like, let's put something like 30 per kg. So further processing cost is 30 per kg. So for 8000 kg, 8 into 24, 2,40,000. 2,40,000 you reduce. So from 20 lakhs, you reduce 2,40,000 plus 8,000, that is 2,48,000 you reduce. Your answer would be 17 lakh 52,000. That would be your business income. Your total agricultural income would be 2,000 minus your cost of cultivation, 8,000 minus your cost of cultivation, this plus this. Now there is a beautiful example of sugar manufacturers in our study material. I would suggest you to do that question, but don't answer in the way that's shown in the book. Try this methodology. Alright, it's no compulsion. You can use whatever methodology that you want, but if you can use this, all the more better. Like, I'll be more happy, and I'm pretty sure this conveys the concept much more better. Alright, so that's it for the second part of our study of agricultural income. So we finished this part as well. Now we're going to the last area, that's aggregation of agricultural income, and this is an area wherein only individuals, HUF, AOP, BOI, AJP, that's artificially juridical person. Yes, juridical person. Sorry, I always get that word messed up. Artificial juridical person. Yeah. Only for those people. Individuals, HUF, AOP, BOI and AJP. Now what do they have in common? These are people who are not taxed under flat rate of incomes. These are people for whom slab rates are applicable. Okay, so only for them. So let's check what is a special treatment for them and finally wind up this video. So aggregation of agricultural income. So this is an indirect way of taxing agricultural income. It is applicable to an assessee if the following conditions are satisfied. Number one, the assessee is an individual, HUF, AOP, BOI, AJP. That is an assessee for whom slab rates of tax is applicable. Next one, point number two, very very important. The assessee has non-agricultural income exceeding basic exemption limit. So a normal individual, your basic exemption limit is 2.5 lakhs. You should have income more than that. Number two, aggregation is, sub point number one for point number two. Aggregation is not done. Please do keep in mind if the assessee only has flat rate of incomes like LTCG or cash flow incomes, for example, lottery or things of that sorts. Because they are taxed under 30%, LTCG is taxed under 20%. Yeah. So if you only have, I'm an individual, I only have long-term capital gain, or I only have lottery income in my total income computation for the last year, then no aggregation will be done. So I need to be a person for whom slab rate of income is applicable, and at the same time I should be earning an income which is taxable under slab rates. Clear? And finally, last point, the assessee has an agricultural income exceeding 5,000. So I'll quickly summarize what we just discussed. So individual or any assessee for whom slab rates are applicable. Yes, plus income over basic exemption limit plus net agricultural income over rupees 5,000. Clear? These 3 points are satisfied. Then you have to conduct this particular tax treatment. Let's check what it is. Simple. A, take agricultural income, write it out. B, take your non-agricultural income, write. C, take your basic exemption limit, write. Put a strong underline here. Strong underline here. Next step. Let me just change the color. Take A and B. That is your agricultural income, non-agricultural income. Add it and write as item number D. Yes. Next, take your items A, agricultural income, and your basic exemption limit, A and C. Add it and write it as E. Now take your pen or pencil, strong underline here. Find your tax on D. What would be the tax you have to pay on D? Find. Just like that, find your tax on E. Find. Strong underline here. Your total tax payable will be tax on D minus tax on F. That is point F minus point G. That would be your total tax payable. So what is tax on D? Tax on D is nothing but your total income, agriculture plus non-agricultural income. Yes, so tax on D is F, correct. That is tax on A plus B. What is tax on E? A plus E's tax. Agricultural income plus basic exemption limit. Clear? That's it. That's how we aggregate. So that's all for this particular area, and I've given some theory here. There's some basic theories wherein I've further explained agriculture processes, operations and everything. We'll quickly go through it and wind up this video. Instances of agricultural income. So income derived from growing, that is basic operations performed, trade or commercial products like jute, cotton, flowers, creepers, saplings, seedlings and nursery plants sold in pots. That's agricultural income. So it's not necessary that you have to grow rice or paddy or wheat or tea or coffee. No. It can be things like jute, cotton, flowers, creepers. It can be nurseries selling plants in pots. But make sure basic operations are performed. Next, very important. Remuneration or interest on capital received by a partner from a firm engaged in agricultural operations. So if I'm a partner in a firm and my firm conducts agricultural activity, the remuneration that I receive, the interest on capital that I receive, agricultural income, free. Next, income from sale of trees grown in denuded parts of forest, like places which are like left out, like a part of forest which had been stripped down of all the trees and animals and whatever inhabitation it had. The whole ecosystem had been taken out, and someone goes and plants trees there and grows these trees and sells these trees. Yeah, that is agricultural income. Alright. Next, fee from land used for grazing cattle being used for agricultural operations. Say I have a big farmland, and in that farmland I allow people to bring in their cattle and let them use it as a grazing land. And the people who are bringing in the cattle pays me something. They are paying me an amount, and whatever amount that they are paying me, for sure it will be treated as agricultural income, because I'm getting the land, income from the land that I'm renting, right? My land is an agricultural land. Next, insurance compensation received by SSC owning tea garden from hailstorm damage. Pretty unique item here. So if I have a tea garden and hailstorm damages my tea garden, I get insurance coverage. That's agricultural income as well. Income derived from saplings or seedlings grown in nursery. That already we discussed in point number 1. So these are different cases of unique agricultural income treatments. Now, please do keep this in mind. Remuneration received by partners. Now, with that in mind, come to the next point. Instance of non-agricultural income. So, salary received by a employee working in a company which is having agricultural income. So, if a company, it's not a firm, it's a company, and the company is doing agricultural activity, and that company pays salary to the employees. The employees cannot say that is agricultural income. Clear? But if it had been a firm, and the firm was paying remuneration to the partners could have said it's agricultural income. Next, dividend received from a company engaged in agricultural operations. No. Next, income from production of salt by flooding land with seawater. No. Income from fisheries, poultry farming, dairy farming. No. Breeding and rearing livestock. No, these are not agricultural incomes. Income received by way of interest by a moneylender in the form of agro produce. Say I'm a moneylender, and in the form of, instead of interest in form of money, I tell the person who has taken money from me is a farmer. I tell him, no, give me my interest in form of whatever you are producing. So he gives me some agricultural products. No, that won't be agricultural income. Profit on sale of standing crops after harvest, where such crops were acquired through purchase. So I acquired a land or acquired some crops, and I'm selling the crops that I've acquired. Or I'm just taking off the crops from the land. I bought a land and that land had some standing crops. I just uprooted, cut the products or plants and I'm selling it. No, that won't be agricultural income. Next, royalty income from mines. No. Next, income earned, very important, from activity of conversion of sugarcane to jaggery. This is because sugarcane itself is marketable, and such conversion hence amounts to non-agricultural income. Alright, this is very important. So say I cultivate sugarcane, I do the basic operations, I do the subsequent operations, and sugarcane is grown. Now I convert this sugarcane into jaggery. Now I'm telling them converting sugarcane into jaggery is a subsequent operation. Income tax won't accept. Income tax will be like, see, sugarcane as a product, you could have sold it. It was fit for the market. So subsequent operations end when your plant or when your harvest is fit for market. You do not necessarily have to make sugarcane into jaggery to sell. No need. So conversion of sugarcane into jaggery, no, it's not agricultural activity. We won't let it as agricultural income. Next, interest on arrears of rent receivable in respect of agricultural land. See, I rent my land to Amal, and Amal did not pay me rent for like 5 months. At the 6th month he came and he said he'll pay. So I said, you pay me the 5 months rent along with interest. Because you didn't pay for 5 months rent, I'm putting a penalty on you. That penalty, that interest will not be agricultural income. Next, any income from land situated outside India. So I have a land in Sri Lanka and I'm doing agricultural activity there and I'm bringing the income to India. No, it will not be agricultural income because it's outside India. Because in point number 1, section 10.1, we learned the land should be in India. Next, annuity received by person in consideration of transfer of agricultural land. Leave it, like basic stuff, any kind of, for you to understand what annuity is, we need to learn what salary is. Let's go to salary, and once you learn what annuity is in salary, you will understand what this point is. Income from supply of water for agricultural operations. So one company comes and they say, I'll provide you with water for your farming. And I pay that company. So the company is like, who gives me money? Farmers are giving me money. Why are they giving me money? Because I supplied water for their agricultural activity. So I also part of agricultural activity. Give me also benefit of agricultural income. Government said, no. And finally, last, income from sale of trees or grass grown spontaneously. I do not know what is the term what is the term you use locally, but in my mother tongue we call it as cartagedi. Cartagedi, as in they grow without any kind of intervention from humans. They just grow. Say for some reason, some kind of pretty valuable crop grows in my land. I take this particular crop and sell it. And I say it's agricultural income. No, government not accept. Because I didn't know anything. It came on its own. Alright. So yeah, that's it for this particular study. We are done with the whole concept of agricultural income. I hope you got a really good understanding of the complete study, complete chapter. Yes, in case you have any doubt, please do post it as comments. I'll be most happy to read your comments and suggestions and everything and get back to them. So, anything left for me to say? Yeah, most certainly, yes, there is one thing that I have to say. If you did like my video, if you enjoyed learning from me, please do give me a like, share, subscribe, add comments, show me some love. That's all that I'm asking in return. Spread the word about this small channel called KYDU or KYDU, whichever way you want to call it. I would be very happy with whatever love that you're giving me. Anything else? Nah, nothing. That's it. So yeah, winding up the session. This is Nishanth Reghunath from KYDU signing off. Take care and goodbye.